Hello again, this is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is July 8th, 2020, and we're back in the office again. We're going to get through some headlines of today and what's moving markets. Markets are actually paying attention to, so let's get right to it. Thanks for watching. We believe at Blanke Schein Wealth Management that information is power, and our goal is to provide our clients, friends, and family with real-time, relevant, market-related information. And our process creates smart, purposeful, financial decisions that improve your life, your family's life, and the community you care so much about. My first topic today, looks like the S&P 500 is testing sort of the moving averages, if you will. We look at the 50 and 200-day moving averages. And so we are seeing the S&P very specifically in what we call a trading range, as it just recently tested sort of the 50-day moving average and pulled back a little bit. Today we have markets up, specifically the NASDAQ, 25th record close for 2020. Who would have thought? But NASDAQ is on a tear, and there's a few mega tech names that are on the surge there that continue to be sort of the workhorse drivers for the NASDAQ specifically. But we do fully anticipate that the range is in place, especially for the S&P 500, simply because it's a broader approach, if you will. NASDAQ is tech-based. As I said before, this is a tech-based rally. Technological revolution, if you will, but the S&P is including other sectors of the economy that seem to be lagging in this environment that we're in. Think energy, financials, industrials. So it's a broader base and sort of a gauge. So we think that, and we believe that the range is intact. So we could see around 3,000 tests on the downside right now to the S&P, to where it's up, in its range right now. So that's sort of what we're going to keep our eye on, and that's our first topic of the day. My next topic is retail bankruptcies. Ultimately, when we have periods of economic stress and hardship and recessions, what they do is they really expose weak sisters, the balance sheets that are, even in a good economy, barely chugging along. The most recent is Brooks Brothers. They just filed for Chapter 11 bankruptcy protection. And ultimately what that is they're pulling forward something that might have been inevitable. Who knows, in that retail world for Brooks Brothers very specifically. Because styles in retail have changed. The new economy, especially in the short term, people don't need the suits to go to work because everyone's at home. And so even in the short term, their sales are declined. Catching that with a lot of rents due. They have a lot of retail stores across the United States, plus no retail sales, if you will, simply in this environment. So unfortunately, it looks like right now Brooks Brothers has filed for bankruptcy, but it doesn't mean that the brand's going away. The protection, we've seen this happen where private equity might come in and do some restructuring, and we might see that brand still exist and those stores still stay open even through this. Ultimately, it's a signal that retail's is going to have a long, hard row ahead and tough road ahead going forward. And this is just the beginning of something like this. Unfortunately, these things happen during hard economic times, and there's too much debt in the balance sheet and not enough sales to cover that. So unfortunately, we're seeing the end of Brooks Brothers, at least in the short term, and who knows what it looks like in the long term, but there's more to come of this, unfortunately. My final topic of the day is gold is up. So we're seeing net inflows year to date at levels that have passed the 2008, 2009 levels that money went into gold in terms of the ETF exchange traded fund. So year to date, we just surpassed the 2009 levels in terms of inflows for gold. Also, pricing in gold has been up, and the strength continues there. Another commodity that we keep an eye on is copper. Copper is very important, and it really tells us, and I've talked about this in the past, sort of the economic activity, sort of in the United States as around the world. Copper's in so many things, believe it or not. And so as copper prices continue to actually do better than gold, they've been up and they continue to do really well. That just is an indication to us that there's a resurgence of a reopening of economic activity, both in the United States, but around the world. So copper prices being up is important. So commodities and metals specifically in that sector of commodities is an indication of inflation long term, and short term, especially gold, is a fear hedge, if you will. It's a feel good trade on the fear hedge gauge. So we're seeing both long term play of inflation hedge, short term play, fear gauge, but copper is important, that it continues to persistently do and outperform and do well. So we want to keep both eyes on both gold and copper as the strength continues, but they're also good economic indicators on a go-forward basis for us. Mark your calendars for the 15th of July at 10 a.m. Pacific Standard Time. We're going to have a mid-year 2020 Zoom call. It's going to be our market outlook, Blanke Schein Wealth Management. We invite all of you, share it with friends and family. And we'll also have a follow-up broadcast in case you can't make that exact moment in time or technology doesn't quite work for you. We're going to record it and then send it out to you as well. So if you can join us, we'd love to have you for next week. It is July 15th at 10 o'clock Pacific Standard Time. That's a Wednesday. So see you then, and thanks for watching today. Take care.